Investing sounds scary, right? You see the flashing numbers, the red and green candles, the guys on CNBC screaming at each other. It feels like you need a finance degree just to buy one stock. Here's the truth they don't tell you. You don't need to pick stocks. You don't need to time the market. You don't need to be a genius. You just need one thing. One boring, simple, almost lazy investment that beats most professional investors. It's called an index fund. And by the end of this video, you'll know exactly how to buy one. Welcome back to Vibe and Sense. Make your money match your vibe. Let's get into it. Let me explain index funds in the simplest way possible. Imagine you want to buy fruit. You could try to pick the single best apple. You study it, you inspect it, you guess if it'll be sweet. That's picking individual stocks. And honestly, it's mostly luck. An index fund is different. Instead of picking one apple, you buy the whole basket. Every apple, every orange, every banana. When one fruit goes bad, you still have the others. When the whole basket grows, you grow with it. An index fund is a basket that holds hundreds or thousands of companies. You buy one fund, and instantly you own tiny pieces of Apple, Microsoft, NVIDIA, Amazon, and hundreds more. No picking winners, no guessing, just owning everything. Here's the part that shocks people. Most professional investors, people whose full-time job is picking stocks, can't beat the market. Year after year, studies show that over 90% of active fund managers underperform a simple S&P 500 index fund. Let me say that again. The experts, with their teams of analysts and expensive software, usually lose to the lazy basket. Why? Because nobody can predict the future. Not Warren Buffett, not the guy on TikTok with the Lamborghini, nobody. The winning strategy isn't being smarter, it's being consistent. An index fund guarantees you earn whatever the market earns, and over long periods of time, the market has gone up, way up. You don't need a dozen different funds, you need two, maybe three. Number one, the S&P 500. This tracks the 500 largest companies in America. Think Apple, Microsoft, Amazon, Google. When people say the market, this is usually what they mean. The most popular version is called VOO, Vanguard S&P 500 ETF. Low cost, simple, boring, perfect. Number two, total stock market. This is the S&P 500 plus thousands of smaller companies. It's even more diversified. The ticker is VTI. That's it. You could stop here. Put your money in VOO or VTI every month for 30 years, and you'll likely do better than most professional investors. Optional number three, total international. If you want exposure to companies outside of the US, add VXUS. But honestly, start with VOO or VTI. That's enough. All right, let's actually do it, step by step. Step 1. Open a brokerage account. I recommend Fidelity, Vanguard, or Charles Schwab. They're free, trusted, and have been around forever. Robinhood works too, but start with the big three. Step 2. Transfer money into the account. Even $50 is fine. Step 3. Search for the fund. Type VOO or VTI in the search bar. Step 4. Click Buy. Enter how many dollars you want to invest, hit Submit. That's it. You're now an investor. Pro tip, set up automatic investing. $20 every Friday. You won't mess it, and future you will be very, very happy. Let me leave you with 3 things to remember. 1. You don't need to pick stocks. Index funds let you own everything. 2. Time beats timing. Don't try to predict the market. Just keep buying, even when it's down. 3. Start today. Even $20, even $10. The single most important factor in investing isn't how much you know, it's how early you start. Your future self is watching this video right now. What do you want them to look back on? A decision you made today or a decision you kept putting off? If this video helped you, hit that subscribe button. We're building something real at Vibe and Sense. Drop a comment. What's one question you still have about investing? I read every single one. Make your money match your vibe. I'll see you in the next one.